There is one secret that professional traders and investors don't want you to know. The secret is that 90% of them cannot beat the S&P 500. So the majority of active traders, people that spend 8 to 10 hours per day on the charts, underperform a simple passive investment. In this video, I will show you how to grow your wealth faster and with less stress by using investments instead of actively trading. Let's start with the basics. Everyone knows about the S&P 500. This is the benchmark for long-term investing, and there's a good reason behind it. The average return of the S&P 500 is around 8 to 10% per year, which turns out to around 7% per year when you adjust it to inflation. So why is the S&P 500 so powerful? Well, the most innovative companies are located in the United States. With the S&P, you get the exposure to all of them. Yes, you get some problematic periods of, let's say, 20% plus in drawdowns. For example, the 2008 crisis, COVID, and you had one recently because of Trump tariffs. We crashed, I think it was around 21%. But in 2 months, we quickly regained that value, and now we're back almost at the all-time highs. So you shouldn't look at the yearly performance, you should look at a 10-year sample size. And also, if you do decide to invest into the S&P 500, don't have weak hands and don't sell right on the bottom. In a period of drawdown, hold your position, maybe even add to your position because you get some great discounts, and wait for the price to go back to the all-time highs as it always does. So what is the best strategy? Well, each month take 10% of your monthly salary, put it into an S&P 500 ETF. Make sure to hold it for at least 5 years, maybe even 10 years. And don't forget about the power of compounding your gains. You have some great compounding calculators online. You can see how much more you make if you actually put in more and more money every single month. When things go bad, such as a war, a trade war, a crisis, or COVID, gold starts to shine, both literally and financially. In fact, at one point this year, because we had the crash on the S&P 500 because of Trump tariffs, gold actually outperformed the S&P on a 10-year sample period. Holding gold is an excellent hedge on inflation and an excellent hedge for your risk on portfolio. So when there's a crisis in the world, you can still make some money if you're holding gold because it is expected for gold to appreciate in value. I also love gold because it's a physical asset. You cannot print it as central banks can print, for example, US dollars. You can also invest into gold by not actually storing it at your house. You can pay companies that store gold for you, and that gold is insured, so if anything happens, you're completely covered. The best investors in the world actually hold gold in their portfolio because they know how powerful it is. And if you don't believe me, you can just open the chart of gold. You can see it just skyrocketing to the upside in the last few decades. Number 3 is real estate. So most people think of real estate as just owning a house, but smart investors use real estate to build huge empires. They buy, rent out, and leverage one property to buy a new one. For example, you have Ben Mala, a YouTuber and a massive real estate mogul who made around, I think it's 500 million from real estate. And what he does, he only puts 20% as a down payment. The rest is financed by the bank using a loan. He buys a property, fixes it up, rents it out or sells it, and then uses the appreciation of the building and the income from the rent to expand further to buy even more buildings. Now you need to know that the real estate market is not as liquid as the stock market. So if you ever need a lot of money quickly, for example, on the S&P 500, you can just sell it instantly. But to sell a house or to sell a building, it can take a few weeks, a few months, maybe even a few years. Also, here is a bonus tip. Commercial real estate, like retail spaces, they often generate high returns and also steady returns. So that's a very good way to get into the real estate market. Also, right now, I would say the prices of real estate all over the world are extremely high, especially in the United States. So we may be reaching a top. It is the same as with the stock market. So the stock market goes through bullish and bearish cycles. And you can see the same thing in the real estate market. Just look at 2008 when there was a massive crash and then a massive appreciation in value a few years after that. So if you buy a house or a building right now, you may be buying at the top, especially if you live in the United States. But if you wait a few years, wait for some prices to fall a bit, wait for the prices to crash a bit, well, then you can get some amazing deals and you can get a nice building for a very cheap price. So make sure you approach the real estate market the same as you would approach the stock market. Buy low, sell high, and watch out for those market cycles. Let's talk about something new. That would be the Darinx index fund. This is an alternative to the S&P 500, but instead of tracking the biggest companies in the United States, it actually tracks the top performing traders on the Darinx platform. For example, this year the S&P 500 had a massive crash of 21%, while the Darinx index had a much lower drawdown and it is now positive. I think it's plus 2% for 2025. So if you like the idea of trading the markets but you don't want to trade yourself, you can invest into the Darinx index and invest into the top performing traders on the platform. And now I also want to mention today's sponsor, which is Darinx Zero. So Darinx Zero is a great way to build a track record, attract capital directly from Darinx, or attract capital from real investors. So I'm personally building a track record on Darinx Zero. I'm doing pretty well this year, so hopefully I'll get some of those allocations. But my end goal is to attract investors. For example, the top guy on Darinx has around $25 million under management, and he got connected with all of those investors through the Darinx platform. So it is really powerful. You can get a lot of capital, and it is much safer than prop firms, because with prop firms you're trading demo money. Prop firms don't want you to win because when you make money they pay you out from the challenge fees. But with Darinx you're trading real money and you don't have to worry about Darinx shutting down tomorrow or rejecting your payout. So if you want to build a track record, get some real capital, make sure you check the link in the description of this video. There's even a discount code. And now I want to talk about Bitcoin. Love it or hate it, Bitcoin's average return in the last 10 years has been around 50% per year. But be aware that the drawdowns can be more than 70%. So Bitcoin is not for the faint-hearted. Something that made Bitcoin more stable recently is the mass adoption that is happening. So as more institutions and countries start actually accepting it and implementing it, the price should stabilize, meaning lower returns but also lower drawdowns. My tip for you is to keep an eye on the news about Bitcoin. So if news outlets are extremely bullish on Bitcoin, that's a good time to be a seller. But when the news outlets are extremely bearish on Bitcoin, when everyone is saying that Bitcoin is a huge scam and that it's gonna go to zero, well, that's a great time to buy. So when you see some very bearish articles in the news, buy some Bitcoin, put it on a hard wallet, never hold it on an exchange such as Binance or FTX. You saw what happened to FTX, so make sure to store it on a hard wallet such as a ledger. I do believe that Bitcoin is here to stay. In the last year, I did use it quite a lot for transfers, and I can tell you Bitcoin transfers are much cheaper and much faster than bank transfers. For the last part, I want to give you an unconventional option for investing. That would be luxury goods. You can make a nice return by investing into classic cars, watches, bags. You could also have some fun in the process. So let me give you some examples. I personally love cars and I know a lot about them. So in my opinion, BMW M5, the E39 or the E60 generation is a great investment right now. You can get one for a very cheap price. Second option would be to get the Toyota GR Yaris. That has immediately become a classic rally car. And I think both of those models will be worth a lot more in the future than they are now. What is also cool, while you're waiting for the value to appreciate, you can use them, you can drive them, you can have a lot of fun. And if you are a girl or Drake, then you can try collecting Birkin bags. Birkin bags have appreciated more than 14% annually in the last 10 years. This beats the S&P 500 and it beats gold. If you love a niche, if you have the passion, if you have the knowledge, you can make a lot of money. So what is the main takeaway from this video? If you want to build wealth in the long term, investing beats trading for most people. You don't need to be glued to your screen for 8 hours per day. Just make smart choices, buy when there is blood in the streets, and think in terms of decades, not days. My top pick from this list is gonna be the S&P 500. It gives you a great return. It is very easy to invest into. It is a very liquid market, so if you ever need the money, you can pull it out quickly. And it's also pretty easy to spot when there is a good buying opportunity for the S&P 500, because usually the newspaper will have headlines such as "This is the end of the world, the S&P 500 has dropped 20-30%, and then you know it is a good time to be a contrarian and to actually buy. If you have made it this far, make sure you comment S&P 500 in the comment section, and if after watching this video you would still rather trade than invest most of your money, make sure to check out zentumtrading.com. That is where we teach you how to go from zero to becoming a consistently profitable trader. Thank you guys very much for watching, and I will see you in the next video.